And now for AFEX Commodities update. For the week ended 31st January 2022, at the Commodities Exchange, we see recorded a 10% increase in volume traded, going from about 8.2 million to 9.1 million units in the week. Let's bring in Femi Kehinde, our analyst, structuring and origination at AFEX. He has the details. Great to have you. Good morning.
Great to be here.
Yeah, so give us a summary on the performance of commodities on the exchange for the month of January.
Yeah, so for the month of January, just a bit of a background. For the week ended 31st January 2022, we actually saw a significant increase in the level of activities on the exchange in terms of the turnover, the volume traded, and the value traded. For the value traded, we actually saw a 15% increase to close the week at 2.29 billion naira. For the volume traded, we actually saw the execution of 9.1 million contracts, representing a 10% increase week on week. For the number of deals executed on the exchange, we actually saw a 14% increase week on week, as a total of 632 deals were executed this week. For the ACI, we saw a marginal decline of 0.77 week on week, and for the AEI, we saw a marginal increase of 0.88 week on week, closing the week at 195 basis points. In terms of the volume traded across commodities on the exchange, maize continued to account for a significant proportion of the trade, as 7 million contracts of maize were executed this week. However, soybean had a beautiful week, as 1.1 million contracts were executed this week. For sorghum, we actually saw the execution of 905,000 contracts executed this week, while we also saw the trade of paddy rice, cocoa, and cashew on the exchange. In terms of commodities prices, cashew actually experienced the largest surge in terms of commodities prices, followed by soybean and maize. For the week ended 31st January 2022, maize actually closed at 242 naira per contract, representing a 1.47% increase week on week. Soybean actually closed at 415 naira per contract, representing a 2.68% increase week on week. Cocoa also increased marginally by 0.56% week on week to close at 1,205 naira per contract. Cashew experienced a significant surge this week, closing at 578 naira per contract, representing a 16.37% increase week on week. However, for paddy rice, we saw a decline of 2.88% week on week, as the commodity closed the week at 220 naira per contract. And for sorghum, we saw a marginal decline of 0.07 week on week, as the commodity closed the week at 239 naira per contract. Other prices on the exchange remained the same for the reporting week.
All right, can you give us an update on the performance of soybean in the international market and factors responsible?
Right, so Brazil continued to account for a significant proportion of the global supply of soybean in the international market. As at last week, on CME, the soybean futures, the March soybean futures on CME, which is the most actively traded, actually closed the day at $15.39 per bushel. And this is a significant increase, a 7-month high since what was recorded in June 2021. The major accounting factor for this is as a result of the bad weather conditions experienced in Brazil. Many agencies have continued to revise their estimates for the country's production of the commodities in this case. The bad weather was usually experienced in November and December, which is a very important year in the production of the commodity in the country. And many experts are beginning to price this situation into the commodities pricing, and then these weather conditions are not currently getting better. So it's sort of a bullish market, or a bullish period for soybean in the international market.
Yeah, commodities are looking quite good at this time. All right, thank you for that update, Femi Kehinde, analyst, structuring and origination, AFEX. Thanks for the update.
Thank you.
All right, still with AFEX, we see Nigeria, like many other countries worldwide, is facing food insecurity, which has been exacerbated by the COVID-19 global pandemic and its impact on the country's food value chain. The pandemic has thrown agriculture value chains into disarray. With the growing food shortfall, it is more critical than ever to leverage innovative financing tools. Let's bring in Yusuf Ogumbi now, head structuring origination at AFEX. Great to have you. Good morning.
Good morning, Ladi. How are you doing?
I'm doing good. Good to have you. Well, funding is one of the major challenges of the agri space. How is AFEX, asset-backed commercial paper solving this challenge?
Yeah, thank you very much. It's been a tussle to look at the financing numbers for agriculture global in Nigeria. And if you extend that globally, you still have some bit of a challenge looking at the numbers. But then if you then come to what AFEX has been doing, looking at the ABCP, it's been quite interesting. This is the second year the ABCP will be brought on board. And primarily, ABCP is meant to finance the processors to get the commodities they need. And it's even though, so it's like the popular saying, you use a stone to kill two birds, right? If the processor is able to get enough capital to buy the commodities they need, it continues to increase the access to markets that the people on the supply side have. So your farmers, the traders, the people that participate in this ecosystem, this continues to deepen the opportunities they have. So looking at what we've been able to do in the second year running now, we've been able to bring in more processors into the ecosystem. We've been able to provide more financing to them and help them overcome the typical challenge they face in accessing capital, either from the commercial banks or from the capital markets generally. So the ABCP is an innovative structure, allows them to overcome some of these risks elements that investors typically price into the instrument. And that means that if they're able to overcome these risks, investors typically look at such instruments as high yield, high return instruments, and they really like to participate in it.
All right, so the AFEX ABCP is directly targeted at the processors, which could be said to be the demand side. Do you think there's a reflective impact from the ABCP on the supply side too?
Yeah, a lot of impact, a lot of impact. Like we all know, economics teaches us that demand is C plus I plus G, which is majorly financing if you look at the bulk of it. And if these processors have more money to participate in the market, they have more money to buy the commodities they need at the right time. What this means is that more people on the supply side of the market will be able to sell their product. So the commercialization rate that you typically have for most of the commodities in Nigeria below 50% would exceed that 50% because there is now more demand on the demand side to buy these commodities. That's on the one hand. On the other hand, what we've also seen is that because there is increased demand by the processors, they will begin to look for opportunities to get closer to these farmers, and you begin to look at instrument backward integration structures that would allow these farmers integrate with the processors. Because the processors have more money now, they are able to participate in this market, they're able to integrate with the farmers are able to access inputs, and all of this is like a virtual cycle for the for the entire industry. So it's a win-win for everybody. The processor gets the financing they need, and the supply side of the market also gets the requisite demand they need to continue to produce and make money.
All right, Yusuf, give me the numbers here. How much has been raised, and what are the benefits for investors involved?
So we have a 3-year program running currently, approved by the SEC, of about 100 billion naira. Out of this 100 billion naira, we've been able to raise, in the first round, raise about 25 billion naira, 25 to 27 billion naira. And what that has been able to do within the months of November, December, and the early part of January is to allow these processors in this program, gives them the opportunity to buy the commodities they need. So if we're looking at a 3-year period of 100 billion, we've done 25 to 27 billion as of today. And then we also have another one opening in some days as well. And that gives investors another set of opportunities to participate in this program.
All right, so, private sector firms have been, identified as having a role to play in assisting, smallholder farmers in meeting growing food demand. So how can we attract more private sector, participants to finance agriculture, just as you're doing that AFEX with the ABCP?
You see, like the equation is simple, to be honest, right? every private sector participant who is looking for the right mix of risk and reward. And if you look at I'm big on private sector participation in instances like this because they are able to allocate capital more efficiently in these kind of situations. And if you're able to balance the risk-reward profile for these private sector participants, they typically look out for these kind of instruments. So you see opportunities to impact lives, social impact, and there's also economic return in this instance. Who doesn't like that? We all like to have this kind of impact on the society. So for me, the private sector requires that right balance of risk and reward to participate in this market. And for us, we are here to help them achieve that, like we are doing with the ABCP, designing the instrument in a risk-proof manner. And we also look forward to participating with more private sector players to participate in this place, to participate in this sector, designing the best instrument to approach some of the problems we have in this sector. At the end, the private sector, like we all know, is probably the best allocator of capital, and they would typically look out for these opportunities to participate in the agriculture sector.
Right. We all want, big returns for our investment. Thank you so much, Yusuf Ogumbi, Head Structuring and Origination at AFEX. Thank you for that. All right, so we'll take a moment now.